every deal is structured differently and every opportunity we look at is differently, but what we do know is that there is always a way to make a deal. And for me, it's all about bringing the right people to the table. It all comes down to having the right team, making sure that you're able to do the bigger and better things. Being open-minded and looking at opportunities wherever you can.
How many businesses are you invested in or own?
There's about 15 at the moment.
So Michael Bronfman, welcome to the Mind Over Markets podcast. Fantastic to have you on today. A little bit of a different flavour today. So we talk about all things property investment, finance, wealth creation, but with your experience in investing in businesses, I think you're going to be able to offer a lot of value to our clients and audience here today. So mate, welcome to the podcast. Just to let everyone know, Michael has been nominated the last 3 years for the Melbourne Young Entrepreneur of the Year. So that's a pretty amazing achievement, mate. Well done.
Thank you.
And I'd love to understand a little bit more about how you go about, because I've heard you say, and I've seen stories of you acquiring businesses or being able to invest in businesses with no money down. That's probably, that seems crazy to me. And I'm sure our clients and audience would love to hear how the bloody hell do you do that?
Sure. I love that. Mate, thanks for having me on board, first and foremost.
Welcome.
And look, I mean, from my perspective, until you do something, as you know, you don't really realize that it's possible. And so I think when you look at a deal and you start to understand the different ways of starting to structure a deal, then you start to realize what's actually possible. And for me, it's all about bringing the right people to the table and then going, okay, I can start leveraging expertise in industries that I don't understand about, for example. Bring these people to the table. They actually invest to come into a deal, for example, which I've done recently, to put up a portion of a deal. So again, every deal is structured differently and every opportunity we look at is differently, but what we do know is that there is always a way to make a deal or, make commercial sense for you. Sometimes we do put money in, sometimes we don't put money in, sometimes we make money on entry, so there's just different ways to structure it. And I think it all comes down to the type of business as well. So for example, if you're acquiring a positive cash flow business, a lot of the time the bank will fund you as well. And so if the bank funds 50% or 75% and you need to come up with the 25%, for example, then obviously what you could do is you could look at where can I get that 25%, all right, in exchange for equity in that business. Right? And typically looking at a business investment that's cash flow positive, it's not often that you can, for example, take $100,000, let's use round numbers, and if you put it into property as a deposit, for example, a lot of the time you're putting money out of your pocket to pay your mortgage, right? So it's not really an investment if you think about it, apart from the capital growth. Whereas in positive cash flow businesses, I can go and pull out $100,000 and potentially get paid anywhere from $1 a month to $1 million a month, right? As a return on my investment. And that's through dividends, right? So I always say, always own equity in businesses. Don't worry too much about salaries and, your sort of your employee mindset. Worry about how can I acquire as much equity in businesses that are cash flowing, especially in markets that are currently the markets that they are today.
Doing well,
and then obviously if you're looking at a business that's not necessarily positive cash flow, then which partners can you bring to the table or investors who will essentially put out capital and you get a large proportion of the business for finding the deal or structuring the deal.
So you kind of, when it's no money down, it's not that there's potentially no money going into the deal, it's just not out of your pocket. You're bringing someone over here to the opportunity. They're putting the capital in.
And I mean, there's instances that you don't bring an investor in, but the seller is happy to do vendor finance, for example. So essentially, if your business is making $10,000 a month in profit, and you buy the business and it costs you $1,000 a month to pay it off over, let's call it 10 years or whatever, however long you want to do the deal, then the business can afford to pay for that transaction, obviously. And so there's instances where we use vendor finance to be able to, pay off the debt, if that makes sense.
And vendor finance is just the two parties coming to agreement on the terms. There's no actual structured
Yeah.
loan process to it. It's just
exactly
whatever works for both parties.
Yeah, and I might say to you as a seller, I might say, well, how about you maintain 10% of your share because I want you still to be somewhat involved,
Yep.
right? You get paid, let's call it 10% of 10 grand, which is $1,000 a month, every month through dividends, right? Plus, I could say to you, well, actually, why don't I pay you your vendor finance over time with an interest component? So if the bank is going to give you 5% interest, you know, when you put in a savings account, I'll give you 10%, you know, but I'll pay for it over time. And if you're a smart investor, you'll probably take the deal, right?
Yeah, okay.
But it depends on your scenario as well. If you're a seller that needs the upfront capital injection to exit and put into another business, you might not agree to that.
Yeah.
But then you have other creative ways of doing the deal,
Fantastic.
right? So
I suppose it's really just looking at a deal and saying, how can we make this win-win for everyone?
Spot on.
Yeah. Are you, I'm sure there's lots of instances of different structures, as you said, but do you have a core focus? Is it to retain equity in the businesses? Is it to get in, add value, sell? What's sort of the main?
It's all different. I mean, at the moment, the strategy is acquiring businesses that are cash flowing.
Yep.
Right? Being able to earn during the duration of the term that you're in the business, and then having an exit plan to be able to exit at a certain multiple.
Right. Okay.
Whereas previously, my younger, stupider Michael might look at, you know, hey, let's get involved in a startup, for example, okay? And then put in your time, sweat equity in over a certain period of time, generate money for the business, not take any money out of the business because you need to reinvest it into the business, and then hope for a payday at the end.
Yeah, okay.
But no longer am I interested in hoping for a payday. I'm interested in collecting along the way,
right?
Plus an exit opportunity.
Okay.
Yeah.
And where do you find the deals?
Yeah, that's a good question. To be honest, it's all about having conversations. Like, I'm at a point now where I get a lot of people come to me naturally and just put things across my table.
Yep.
You know, but obviously when I wasn't in that position, I was always very open-minded, always networked, always understood what's out there, who's doing what, why they're doing this, following, you know, trends, and talking to people and bringing deals to the table. So, for example, I'm in the process of doing a very large childcare deal, okay? And to do that deal, we needed a very influential or specific developer in the market. And so through my network, I was able to reach out. We caught up yesterday, for example, and they're going to help us build 80 childcares in Victoria, right? So through your network and through asking and talking to people, then it's almost like you need to understand what you need to do to make sure that you get the plan over the line, and then you just go and execute.
Yeah, okay.
You know?
So having that network is obviously the critical aspect of it.
Yeah, it helps.
Absolutely.
For sure. But always also being open-minded and looking at opportunities wherever you can, right? So as you could appreciate, if you don't have opportunities coming, you know, to your desk, understand what are people doing and understand where the opportunities lay, right? So for example, you know, we understand that 5 years ago, for example, everyone was doing childcares. Now people are selling out. I want to know why, if I'm going to go into that industry.
Yeah, absolutely.
You know, or everyone's talking about Bitcoin now and it's a hype and all that kind of stuff. If everyone's talking about it, it's probably late, you know? So just understanding or forecasting where you think a market's going to go in 5 to 10 years.
Yeah, okay.
And then seeing where the opportunities are in that market and make sure it's a big enough market, you know?
Yeah. I mean, sounds simple. Just research the industry or the sector, find out where the opportunity is.
Yeah.
But I guess being able to break that down, has that just come from years of doing and learning or is that?
I think so. And obviously just meeting people and talking to people and learning off their areas, I think is critical, you know, because, for example, recently we've picked up the fact that, you know, we should probably explore more recurring revenue models that are potentially government funded.
Right.
So when you look at that aspect, you've got things like gyms, for example, right? When you go, whether member goes to a gym or he doesn't go to a gym, you as a business owner, you get paid regardless.
Yep.
Okay? So that's a reoccurring, every week you get paid, right? Similarly, with childcare, you get paid and it's government funded, which means you're not going to have bad debts, you know? So people aren't going to default because the government is paying the money, you know, unless the government defaults, obviously, which is a rare case. And so through conversations, through people who have experience, we've been able to understand what's a better opportunity, but also through learning, right? And trial and error, right? Like, I mean, I had properties, residential properties, and some did great, some didn't do so well. And I just figured out there's probably better opportunities out there.
Yep.
Not to say I think property is a phenomenal investment. It's just understanding what's a better opportunity that's actually paying you cash flow.
Yeah, and I think it's the right asset class at the right time. Like residential property investment is fantastic for, you know, mum and dad. We've got some equity in the home. We want to build a little bit of wealth for the family, and it's a fantastic vehicle. There's a sort of fairly low barrier of entry. Naturally, once the portfolio builds, we start to step into maybe commercial. And then of course, if capital allows, and the appetite's there, then maybe stepping up and going into businesses and doing things. So I think it's horses for courses.
Exactly.
You know, we specialise in residential property investment. It doesn't mean that's the only asset class people should be looking at. Hence bringing you on today. So.
And even on the residential property end or front, you know, I've been talking to a lot of developers recently and who have a lot of experience. And as you know, costs of goods have gone up on building property and developing property, right? And so there's no longer big margins to be made on developments, right? So their strategy now is buying something that's on decent sized block, holding it, potentially living in it to avoid the capital gains tax, then flipping it in 2 years' time, right? You know, and if you do that 5 to 10 times, you're doing pretty well. And you're making more money, right? Without headaches. So like I'm all about how can we, you know, minimize friction, less headaches, more upside, lower risk, you know?
Fantastic.
It's critical.
You said before about there's value in, you know, recurring income backed by government. Childcare is the perfect example. Yet so many are selling out of the sector. What's the, like you've seen the opportunity, yet so many are selling out.
It's just because obviously cost has increased to build, you know, and when you're building a childcare, it's expensive. But also people have made their money, you know, like they've done their thing and it was a hot sector and still is a hot sector and always will be probably. But it's just that people have done their thing. It was low cost to develop at that point. They've made their money and they've exited and they've got every right to. And then now they're looking at other opportunities, right? But it doesn't mean there's no opportunity there. It's just, I like the model, you know? And I'm not sitting here to say childcare is the way to go, right? It's just diversification is one element that you've got to look at. A lot of my stuff has been online previously, you know, as you know. And I've recently recognized that, you know, yes, there's big returns in tech. That's if you hit the lottery or the jackpot, right? And that's very rare to happen. And so what you need to do is you need to continue and look at how do we, especially in financial markets that are challenging, is how do we do stuff that actually is going to pay us cash flow, you know, and increase cash flow to then invest into those lottery ticket opportunities. You know?
When you say lottery ticket opportunity, what do you mean? Like just a business that's just going to, you know...
like not everyone's going to build an Uber tomorrow. Right? Like Uber's one of millions, you know. However, it's a possibility, but the risk versus reward is much higher. And the chance of you succeeding is much lower. You know, and so what I'm saying to you is build your, and this is what I did wrong probably, right? Is like, I always focused on those opportunities to start rather than the other way around where I should have gone, build as much cash flow as possible, okay? And then start taking bets. That's my opinion. That's not to say you can't do extremely well, and there are people that have been worked extremely hard and we're very lucky as well. You know, it just depends what you're trying to achieve.
You mentioned luck. I think anything in life does require a bit of luck, of course, as well, doesn't it? You can do your best assessment, but I suppose you get a little bit of luck, you can really lift that multiplier.
Exactly. You can have good luck, you can have bad luck, you know, but I think everything's a learning, all right? So as long as you take your learning, don't make the mistake. If you make the mistake once, okay, it's fine. You make it twice, you make it 3 times, you're an idiot.
You're an idiot.
You know?
Yeah,
So
absolutely.
just learn.
Yeah, absolutely. And you're involved in the Israel Investment Opportunity Fund. Is that what it's called? Is that
Well, I've got a lot of opportunities out of Israel.
Right.
And that's because I'm from there originally.
Okay.
And I've got a lot of contacts over there, and they're very innovative when it comes to tech and business in particular. You know, the stat is in Israel there's about 6 million, you know, to 9 million now probably people, versus Australia, I don't know, 21 or 24 million from what I recall. In Australia, I think we had about 7 unicorn companies, which is $1 billion business.
right?
Since Australia was born, and in Israel, a much younger country with less than a quarter of the people, or you know, about the quarter of the people, there's been about 70 billion dollar companies. Yeah,
Holy moly, yeah.
you know, so
That's incredible.
that tells you something.
Gee whiz.
And there's opportunities, and they're always looking at investment opportunities.
Yeah.
over there.
Do you get over there much? Do you have to sort of spend a bit of time over
Not
there?
anymore, but used to.
Yeah. Wow, that's an incredible statistic.
Yeah, it's crazy.
Far out.
Yeah, so I think it's the most $1 billion companies per capita. Yeah,
Yeah, right.
in the world.
Holy, that's
So
incredible.
in Australia, we're probably 15 years behind
Yeah.
when it comes to tech in Israel. Yeah.
Wow, that's an interesting stat right there.
Yeah.
Now, as far as adding value to businesses, what's the main way you do that? Is that through bringing people to the table? Like you kind
Yeah, I think bringing people to the table is like a really critical way of doing it. And obviously, you know, other people that can add value to the business is one of the core elements. Obviously, the other element is being able to put a strategy together to be able to scale because people haven't been there. So they need the support.
Yep.
And through that journey, then support them in executing and bring the right people to the table to execute on the plan, right? Now, obviously, then there's an opportunity as you see a business grow to also invest in that business because you know what the founders are like, what the management team are like, what the leadership team are like, and so forth and so on.
Yeah.
And then you can also potentially acquire equity in exchange for your expertise, right? Which I've done in the past.
Yep.
So, Michael, we can no longer afford to pay you, but we love the amount of value you bring to the table. Can you stay on? We'll give 15% of the company, you know, or something like that. And you give them an hour a month, for example, you know, as an advisory. So there's also opportunities like that where
interesting.
you've got expertise, you're happy to not take a salary, but you see the future of the business and you can take equity in those businesses.
Very interesting. We're at I don't want to call it a fork in the road, but we're at that juncture where, you know, we've grown significantly in the last few years. We've been able to add, you know, staff. We've been able to add offices, and you know that's only just the beginning. So really interesting to understand how those sort of opportunities are put together and how you might be able to even potentially add value to our business. Like that's really quite interesting given where we're at as a company right now. So
that's exciting time.
It is. It's very exciting. I mentioned to you before we were on stage in front of 3,000 people last Friday. Dave Goggins, Mark Boris, JT Fox, Kaylee, who you know. Yeah, it was amazing. So I think that's going to really start to, you know, hopefully ramp things up and change the perception, or you know, new eyes on Logic Partners. Hey, hang on, you guys are on stage with all these, you know, sort of big names. So it's pretty cool.
Yeah, the fact that you're growing in this market's good. You know, if you're growing as a business in this financial market, you're doing well.
Yeah, we've had some pretty severe headwinds the last few years with obviously COVID and given we're in the property space, you know, builders going broke. We're in the new build space as well. Land title delays, interest rates going through the roof. Like it's been a tough time. And we've added locations, we've added staff, we've brought on more clients, and I just shared on my social media yesterday, we've got our client appreciation lunch this Sunday.
Nice.
Every single one of my clients that's coming, and I'm so pumped to have them all in the same room. Every single one of them has made 6-figure gains off their deal in the last 12 or 18 months.
It's impressive.
Which is in a market that's meant to be
unheard
tough and hard and, you know, all those things.
That's great.
And everyone's scared. These people that have taken action.
That's amazing.
And the core group is, they're probably 28 to early 30s, 27, 28, 31 years
Yeah,
old.
wow.
Like I'm going to have a group of them, you know, a dozen of them there on the weekend.
That's
and it's
impressive.
It's going to be so good to have them all in the same
Love
room.
that.
Like,
yeah,
it's
that's
gonna
good.
be-
I think when you go above and beyond for your customer, you know,
Yeah.
and you help them out and you get them results, then they'll, you know, your business is going to thrive.
And that's, I guess, the real point of difference, I guess, with what we offer. There's, I mentioned before, we're in an unregulated space, so the door's open for some shitty sort of activity. Most people in the property game are, just selling anything to anyone.
Right.
Sort of sales and marketing, really, whereas we are a genuine advisory and we're part of a network that's all about transparency, compliance, providing consumer protection. And so when people understand that, I think they're happy to sort of say, this is a space I can go in with a bit of confidence.
Yeah.
That's why we work a lot with accountants, financial planners, even we've got a finance arm of our business.
Yep.
We work with so many mortgage brokers that entrust us with their clients.
Right.
Even though we've got a finance arm,
Yep.
we don't mention finance at all to the client. It's the property advisory division. So it's all about relationships, trust, which is no doubt what you're obviously used to doing to be able to build that network.
Yeah, critical.
Create those opportunities.
Yeah.
It's we're hoping that the industry will one day become regulated.
Yeah.
It'll stamp out a lot of the cowboys and the sharks that are genuinely doing the wrong thing.
Yeah, that's good.
We've all heard stories of people getting either overpaying for something or getting sold something in the middle of nowhere that's not going to sit there spinning its wheels for the next 10 years. Yeah, it happens all the time, unfortunately. Walking away from deposits because they're going to get finance and the thing's worth 100 grand less than what they signed the contract for, and that sort of shit.
It's really bad.
Trying to stop, We do get paid by the vendors.
Okay.
We disclose that fee to our clients.
Right.
And people in the industry are like, what? You tell your client?
Yeah, that's good.
So it's documented on our EOI.
I love that.
So it's good. It's nice. I still remember, I met up with Sam, who's the owner and founder of Logic.
Yeah.
And I still remember our chat. We spoke about Essendon Fields before. We were sitting at the front of the cafe there.
Yeah.
And he said, when the phone rings and it's a private number, I pick it up every single time. I've got nothing to worry about.
Yeah.
Don't have to worry about a client being upset. Don't have to worry about who we sharp.
Who's chasing.
Who's chasing. Yeah. And the words still ring true in my ears today. It's unreal. So it's fantastic. Nice to be able to operate.
It's good. It's good to have a moral compass. To be able to go, we know we're doing the right thing by people. We can be transparent about it, because I think that's quite a unique value proposition that you could hone in on, as your business.
Absolutely. I heard a song the other day. It's a young guy out of the UK. He's sort of like they're sort of calling him the new Eminem almost. And he's got a song called The Money Game. Okay. And it's about, I don't necessarily agree with all the views, but he's basically saying that the big corporations and government are just there to screw people, basically.
Yeah, pretty much.
It's a really interesting take that he says, but one of the lines in it is about morals being a poor man's quality.
Yeah, right.
Essentially saying that the only way you can make money is to screw people. Yeah. And so that's the exact opposite of our view, is that we can come in and we can make money. Yeah. We can help our clients make money. That's great. We can do it ethically, transparently, compliantly.
Yeah, I love that.
So I love the song, but it's just, we're sort of trying to be the opposite of it at the same time.
It's fantastic. Maybe you should make the next song.
I might do the flip side of it.
Yeah. That's it.
Might have to work out of that. I won't be singing it though. Can you sing? Maybe you can sing.
Nah, not really. No. I'm sure one of my business partners could, but
And on business partners, you must have like a lot of people that you have to lean on. Do you mind if I ask? And feel free to not answer. How many businesses are you invested in or own?
There's about 15 at the moment.
Yep.
And that's only growing, like we'll probably do another 2 deals before the end of the year.
Yep.
That we're, doing DD on, actually probably 3 even. And next year we'll do at least 10, at a bare minimum,
Fantastic.
So everything's moving in the right direction. And, again, having 10, let's call it 15 companies doesn't necessarily mean I've got 15 business partners, right?
Right.
So, it's again, it all comes down to having the right team, making sure that you're able to do the bigger and better things, Yeah.
I saw recently you were able to get a deal done where you with, I think it was a pharmaceutical where you got access to 6,000 accounts.
Yeah,
20,
that's right.
20 odd sales staff.
It's crazy.
With no money down.
No money
Yeah,
down.
that was like,
they wanted to charge us like $500,000.
and in the end, they put money in your side.
Yeah,
Tell us
crazy.
Tell us a little bit about that.
So basically they're one of the largest pharmacy groups or distributors in Australia. They look after some of the largest brands, and essentially they loved our product, they loved our story, they loved our founder, and through negotiation, essentially what I did was I tied them down to KPIs, and I said, look guys, if you meet your KPIs, then what we'll do is we'll unlock X amount of equity in our business in exchange for not having to pay you, and in exchange for you generating us revenue. Right. So what they ended up doing, which they've never done before, by the way. So we're the first company they've ever trialed this with. And we're like at 2,000 accounts now, within 12 months. And they've got access to 6,000, right?
Wow.
So essentially they were going to charge us, I think it was about 15 grand plus GST a month, plus commissions on top. And it was a 24-month deal. So the deal value was probably worth at about $500,000. And what we ended up doing is that $500,000 became an investment into our business at a $6 million valuation cap, which meant they acquired about, from memory, it was about 6% of the company. And we didn't unlock the equity until, so we unlocked the equity monthly basically. So if they met their 40 sites today, for example, or this month, then we'll unlock X% of equity, right? If they don't meet it, we don't unlock the equity.
Right.
Yeah.
And that's bringing another product across to get into those stores. Is that what you mean by the 40 stores?
No, so essentially what we had our own product offering.
Your own product, yep.
Yeah, and then they were taking our product offering into the market.
Yep.
And we said to them, well, if you get us, let's call it 2,000 stores in the next 12 months, you'll get your equity. If you don't get it.
Yeah, okay.
So we de-risked ourselves completely by not having to pay them. But obviously we participated in the upside because then they were able to, show that, prove that they can do it,
That is amazing.
Too often you get, you start talking about these arrangements and then you get the company on the other side, and you see this all the time with digital marketing agencies, right? Where you say, well, you're going to charge me, let's call it, they're going to charge me $5,000, but you don't know what the outcome's going to be a month, right?
Right, yeah.
So if you back yourself and you're good at what you do and you think you're going to make me more than the $5,000 a month, let's do a deal. You get 50% of the income. I'll get 50% of the income.
Yep.
You'll get paid well more than the $5,000 a month. Show me what what you can do.
Put your money where
and
your
if they
mouth
say no, it means they're not good enough. They come back themselves.
They don't back themselves, yeah. Amazing.
It's simple.
I guess, when you break it down like that, it's fair enough.
But they win if they perform.
Yeah. Okay. That's interesting. That's a really interesting model. Win-win. And that's what it's all about, right?
It's about that.
Yeah. How can you share with us, without any maybe specific numbers, you spoke before about winning the lottery.
Yeah.
Have you had any deals that have just completely over-exceeded your expectations or...
Yeah, I mean, I had a property deal which I made quite a bit of money on within a very short period of time. It was like a 8-month period. It was like a off-market opportunity, bought it really well. It was a distressed seller.
Okay.
Market became very hot like pre-COVID. I can't remember if it was pre or during COVID. It was a record sale for the area.
Yeah, fantastic.
Tax-free because we lived in it.
Yeah, okay. Did you like a reno on it or something?
Nothing.
No, didn't do anything?
No, it was just a really good lifestyle home.
Yeah.
And big land.
Fantastic.
So that worked out really well. And then obviously, there's deals in the tech space that, you put your time, effort, investment and money and it pays off. And I had one of those, which has been good. But always looking for more opportunities. And, as much as you hear about the 15 companies, right? Like 20% will generate 80%, right?
Right.
So, majority of them don't do well. And that's the VC model, the venture capital fund. Like if you've got a family office, traditionally 50% or more will be towards property, which is their safe bet. Then let's call it 30% might be private equity. And then 10 to 20% will be their venture capital arm, right? Because they know it's a higher risk, higher reward. And so there's one family office in particular that backed Canva, for example,
Right.
Very early on, and that 10x their fund, in a very short period of time.
Amazing.
But they recognize that if they put 20 bets, right, they know that probably 15 of them will fail.
Yep.
And then 3 might become small to medium, and then 1 or 2 will become a unicorn business, right?
Okay.
So that's the model,
right?
So it's not an easy model to crack.
And when you say fail, obviously we're trying to mitigate that loss on a fail. It's not fail as in we've burn a shitload of cash.
No, you'll lose all your money practically.
Oh, right.
So let's say you've got $10 million to invest.
Lose all the money into that deal, you mean?
Yeah. So let's say you might have $10 million and you go, I'm going to invest it or spread it across 20 companies. Let's just use round numbers. 20 million across 20 companies. That's $1 million each on each company.
Yep.
Okay. Probably you'll end up losing 15 million in that journey, but the one will make you the 100 million.
Yeah, gotcha.
That's how it works.
Yeah. And I guess, is it a little bit like, they say the house always wins in the casino, for example. It's about each time the coin gets tossed, it's not 50-50. What the venture capital funds are doing is they're able to sort of hedge their bets. They know that the losses are only $1 million, but the upside is massive.
That's right. On the other deals.
Yeah, on the other deal. And I just sort of describe that to my wife as, how about if we could play heads or tails with a coin, and every time you win, I give you $1. Every time I win, you give me $2.
Yeah, right.
I want to play that game as long as possible.
For sure, but you've got much better odds.
I'm going to come out on top.
Yeah.
You're going to lose a bunch.
Yeah.
Bunch of times, but there's no doubt we come out on top. And I guess that's kind of what you're...
Similar, it's just VC is very risky, if you're someone starting out in investing, I would never suggest, angel investing first. I'd go get my backyard sorted first, then look at as a big opportunity.
Yeah, absolutely. And like we said before about, there's steps in people's, I guess, wealth creation and investment journey. I'm big on mental health, hence the name of the podcast, Mind Over Markets. It's sort of more of a personal passion outside of business. You've got a young family, 3 kids. You've spent a lot of time not only working but interstate and overseas. How do you manage it, mate? I've just had my second kid, and it's bloody hard.
It's hard,
and I don't have anywhere near the plate spinning that you've got.
Yeah, it's challenging, obviously, because you've just got to prioritize what matters to you. At the end of the day, money, objects, all that kind of stuff can come and go, but family's number one. So for me, it's all about allocating time to what's important. So unless I look after myself first, and I'm good from a mental health perspective, fitness, feeling, then my family won't be. If I'm unhappy, they're not going to be happy.
Yeah, that's right.
Because they look for me as a role model, So my number one is I'll get up, I'll do my training, whatever I need to do, right? To get my mindset right. Then I can make sure my family's good, I allocate the time for that. Then I know my business is going, So you've got to have a structure and hierarchy in your life. And unfortunately, you see this time and time again where business owners go through divorce. It's very common, right? Very rarely I meet a business owner that is not divorced, and that is because, unfortunately, we become very hungry, very greedy, and our focus and attention goes on to the one thing.
Yeah, right.
And it lacks elsewhere.
Yeah,
right?
okay.
So it's critical to make sure that you've got a balance.
Fantastic. Isn't it? It's such an interesting observation.
Yeah.
That so many business owners are divorced.
Mate, every day I have conversations with business owners. First thing they said, I've got 2 kids, I'm divorced.
Yeah.
All the time, And so, but you can recognize why, because you understand that you need to, about the plates, you need to spin all the plates,
Yeah, there's a famous...
Otherwise you'll fall.
The famous talk about, I think it might have been, was it the Coca-Cola executive about having these balls that are juggling, and not allowing the balls to hit the ground, but
it's literally that.
One of them's glass, and the glass one is the family.
That's it.
There's business, there's health, there's blah, blah, but the glass.
Yeah. Sorry to cut this episode short. Unfortunately, we lost the last 10 minutes of this interview with Michael. But if you've got any questions about the work Michael does, we've left his information in the show notes for you to get in touch with him directly. And don't forget, hit subscribe or follow along to make sure you don't miss out on any future episodes.